Vincenzo'S Gold Crypto Investing this June the 23rd nightly daily cryptocurrency, blockchain technology, gold, and silver bullion update that you've come to expect, love, need, and deserve from the number one cryptocurrency and one of the few that are here for the retail trader and investor to become asset millionaires via gold and silver bullion and mining stocks, 401k steady investing, cash on the side, collecting interest to be able to add into your bags or buy new assets at appropriate and strategic times, as well as real estate and cryptocurrencies, right? A well-rounded basket of assets over purchasing over a consistent period of time with steady investing. You can and will become an asset millionaire and become members of Jabroni Killer's video description and or pinned comment. As cheap as $3.99 a month to help support the movement, the channel of truth, trust, education, and information, and being Commodity Mondays. The dollar slides as Trump announces Mideast ceasefire. The United States, and this also helped the cryptocurrencies pump a little bit higher than we thought they would from last night, but we were expecting a pump after the dump yesterday. The United States dollar index fell to around 98.2 on Tuesday, extending its decline from the previous session after President Donald Trump announced a ceasefire agreement between Iran and Israel, dubbing the conflict the 12-day war. Markets also largely shrugged off Iran retaliatory strikes on U.S. base in Qatar, which caused no casualties, partly and mostly and primarily because they told the United States they were going to bomb the targets before they bombed it. Adding to the dollar's weakness, the Federal Reserve Governor Michael Bowman, one of the criminal gangster henchmen, said he could support a rate cut in July if inflation remains subdued, echoing dovish remarks from Governor Christopher Waller. Traders responded by ramping up bets on monetary easing, now pricing in roughly 55 or a half a basis point rate cut by year's end. Investors' focus now shift to Fed Chair Powell's semi-annual testimony before Congress, where markets will look to for further guidance on central bank policy trajectory. So that's very interesting, and that plays a role on the cryptocurrencies. It plays a role on the commodity market, and you can see one of the big things with the ceasefire in the commodity market that got hit very, very big today was oil. Oil had a big reversal, and it was down greater than 10%. And you can see from its peak high to its peak low today, it was down greater than over the last 48 hours, 16.27% based on the news. And that was a big dump and a big shock to the oil market. And now what we're watching in the oil market is for the recovery. That was this brief move here was completely news based with the war starting up. See that? The war was starting up. It pumped the price. But if you noticed, oil has been in a bear market ever since we had the blow off COVID top, where oil futures were actually negative right there. You can see that. They dipped negative. See that? All the way to zero. They were actually negative. Then they had a massive rally from that point that peaked out in March of 2022 and then had a secondary slightly lower peak in June of 2022. And since then, that was the bearish confirmation rejection. There was a critical resistance support level at $97.46. And you can see the reason that it was a critical support level back in the 2008 financial collapse. You can see we broke above that and then had the big massive capitulation and retail flush, right, with the 2008 financial crisis, right? And you can see oil at that point went down 78.72%. And then obviously it rallied after that as we came out of there. But look where the major resistance was, starting in around 2011. And it ran a horizontal resistance from 2011 all the way to 2014 before it capitulated and got rejected below it. And that was a critical resistance level, a critical bearish move, and that forced the price down. Now, ever since then, where we've had 3 consecutive dumps followed by just long drawn-out rallies, dump, long drawn-out rally, dump, long drawn-out rally, dump, long drawn-out rally, now a dump again from the COVID. So that's very critical that we got rejected by there. And oil is going to do one of two things. Either geopolitical things are going to spike oil up and bring this over the next year or two as things heat up, maybe potentially, we come retest the 124. Or the lower demand of oil is going to continue tanking oil, and you could come retest some of these lows. Maybe not that low, but maybe you come retest the $43 a barrel oil. I don't think that's going to happen. I think eventually oil's got to start to go up just because of inflation. But it is very interesting that oil is still declining. You can see something that I've started to accumulate now is it's a very speculative, it's very volatile, and it doesn't run on the same, which you would expect gold and silver and hedging. It doesn't necessarily and often doesn't run on the same trajectory. But you can see we had the blow off top in 2008. You can see we did have the big dump during two, and it was a massive dump because these are highly volatile. So this actually went down 71.09%. But then obviously we had a humongous rally and made a new high three and a half years later. And then you can see from 2015 to 2022, there was a palladium and platinum super bull market, right? And you went all the way up to almost $4,000. And from the support touch in 2015 in December to the wick high, you went up nearly 7 times itself in the price of platinum or palladium, running from about $435 an ounce all the way up here to $34.45. And now we've been consolidating on our uptrend line again for a few months. And we've had platinum already come off its support line, and you can see it runs in a similar fashion. It's been on the stock market a little bit longer, and you can see we've had a couple of dumps, and then here was that 2002 dump, and then this dump actually took place. There wasn't really a big dump in 2008. It looks like it was about right there. And then because we were in the middle of a tremendous bull market in platinum, from just like palladium, from 1998 all the way to the blow off top in I guess 2008. So there was your financial collapse. But you can see it had a quick rebound followed by a long consolidation since then. And then we had a capitulation low in COVID, and then we had a nice rally, and it woke up platinum. Then it traded sideways, and now we've went up 50% in the last two and a half months, and we're coming to our COVID highs. And platinum, if you break the COVID highs and this continues, other than a brief retracement, you're going to come up, if you breach this, you'll come up and threaten your all-time high, because usually platinum and palladium are more expensive than gold. And right now, in some cases, they're greater than 100% cheaper than gold. So there's some upside potential there. But I just wanted to give you some looks at that. But the cryptocurrencies, which you guys are all here for, we'll look at the Bitcoin. We had the big pump today, and the later afternoon news was the Donald Trump ceasefire news. And you can see we have been in ever since. And this is very interesting, and this is something I just put on today. Ever since we came off that mountain double top of the COVID high, and we had, a 65% mountain double top correction to the downside, 77.31%, just above our 11,318.69 target, right? But it's been in a rising channel the whole time, ever since then. It's kind of amazing I never picked this out. But it's been in this rising channel ever since then with the falling volume. And look at that. That's just kind of what these patterns that we do. Not saying that this is, but the big hump, the turtle, and then its head or the conveyor right there. See that? There's your turtle or the shell with the conveyor belt. And we do know these are bullish continuation patterns, but eventually they're bearish reversal patterns at the top. And you can see the track that would actually line up with that is right there in purple. That does bring it down to 32,000, and that would be a technical move. And that would make sense after a super bull market with new all-time highs in the Bitcoin price and the cryptocurrencies, that you would have a bear market, because we went over the percentages yesterday. On average, it's about a 79% bear market correction that lasts about a year for the Bitcoin price, right? And you can see where we had that most recent bounce. The last time we came down here, we bounced once, we bounced twice, and then slipped below it, and then came back to it, but got cut down at the midway point. And something that we're watching now in the Bitcoin price is what happens the next several days. Do we just continue pumping and we breach the all-time high and continue back up into this channel and trade into this channel all the way up to upper resistance, which if you trade to upper resistance now in this channel, that would be at current time frame all the way up here at $147,000 in this rising channel, right? So this is very interesting. Or are we just rounding this top where we formed our mountain double top, right? A beautiful mountain double top. And now we're just on the downside of the right side of the double top. And it's soon, and the trigger point is if you break this, and you can see we have two patterns. One does actually break to the downside, and the other outliner breaks to the upside and actually runs you all the way up to $173,000 towards the end of the year, but follows within this rising channel. This is where this is our decision point. What are we going to do? Are we going to slip these moving averages and eventually trade below this? And then we use it as resistance and get the classic bearish confirmation and we start to trade down? Or is this going to be a continued move to the upside? As you do know, I've been theorizing that this is a mountain double top and we're going to eventually be retesting and coming back down to the 73,845.25, and potentially by the end of the year, if what we were looking at was correct in the future, becomes confirmed, we're coming to 57,621 and change. But obviously we got to pay attention if this doesn't break to the downside, and got to understand that we could go as high as the 147,646.51. But right now I still think we're on the right track on what's going on there with the Bitcoin price. The Ethereum had a nice rally up today after a 35% to the downside over the weekend and coming from last week from the swing high that's right here. And we're running up into the moving averages now, and this is where it's going to get interesting. If we can get back on top of these moving averages in Ethereum like so, we can get bullish again. And if you're on top of the moving averages, we do know our upside potential target is the bottom part of this green resistance zone at 3,058.75. But if we get rejected and stay below these three major moving averages that are all running parallel, essentially on top of each other, and you're in the thick of them right now, you're actually just below the 50-day moving average. If you stay below them and get this hook nose bearish reversal, it will drive you to 1869 in the blink of an eye, right? So that's what we're looking at with the Ethereum price. The XLM price, the same thing. We're in a similar situation to what we were in back here, where we came below it, just above our 18-cent target that we have there, right? Just above it. And then we had a nice run up for the next couple of weeks, where we went from the swing low of about 21.5 cents to the swing high of about 33.33 cents. And then now we've been on the downside. We can see the moving averages have been trending down. And what you would expect here, after you're about to have a freshly minted completion of the golden bearish cross, where the long-term moving average will be on top, the short-term moving average of the 50 and the daily will be on the bottom, and the medium-term or the 100-day moving average will be in the middle. What you would expect here, if this is going to be a bearish confirmation, is you trade back up, could come up and actually touch this beautifully. You don't have to, but you could. And that gives you the classic delete bearish reversal pattern right there. And that would drive you down with the overhead moving averages. At the same time, would be running south very quickly. That would drive you down to that underneath 18-cent target. On the flip side, if it's not ready to confirm this as a major resistance from a major support, it'll come back on top of this, hold it as support, and then eventually jump those moving averages that are sitting there. So that's what we're going to watch out in the XLM price, similar to what we were looking at. We gave you the first mover advantage. Members of Jabroni Killers and subscribers, the reason it's very time sensitive, important for you to be that is you understood with the Bitcoin, the Ethereum, the XLM, the XRP, there would have been better buying opportunities from the swing highs after 8 to 10x moves. That wasn't the time to buy. The time to buy was on the consolidation, like where we're in now, where we've been as low as $1.60. Right now, we've wicked back above the neckline again successfully. And now this is going to be what's critical, is do we again, just like we did back here, have multiple bounces and then shoot way to the upside and confirm it as bullish and support still? Or are we going to this time get chopped down by the overhead moving averages after the news wears out from the ceasefire, and then it's going to quickly chop down, finally get back below it, and that's going to be the bearish confirmation. So it's going to be very critical over the next 72 hours and the rest of this weekly candle to hold above this, because we used a lot of energy right there to come up from down here to pump up 12.69%. Lots and lots of energy was used to do that, and it needs to hold and stay above this neckline support at 209, because if you slip back below it after peaking back above it and you do this and then you lose that local area, you're confirming that as a new resistance area, just like the XLM price, and that would be very bearish. To get bullish, obviously, short term, to make another run at the 255, you get above the 223 and the 221 100-day and 50-day moving averages. Peace and love, the Rex Eyebrow, my beautiful audience, Jay.